You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Because, the sector is in the process of creating this bottom, and when these significant bottoms are being created, it does everything in its power to get you off that bull before that bull takes off. Everything that it could do to shake you off that bull, it's going to do. And it's doing that right now.
Welcome back to Mining Stock Education. I'm your host, Bill Powers, chatting today with my friend David Erfle over at JuniorMinerJunkie.com. David, welcome back onto the program. And as we start off January, we see that the general equities, the Dow, is having a hard time continuing in that uptrend. We also see Bitcoin tumbling. The Federal Reserve minutes are this week on Wednesday, and gold seems to be holding up pretty strong. How encouraged are you as a gold investor right now?
Oh, it's really getting exciting now, isn't it? Yeah. Thanks again for having me on. It's always great to talk to you every month. It's really getting interesting here in our sector, after being boring for so long for so many people. But it's getting interesting in where it's whipsawing traders. You're seeing moves sharply up, and then people think, okay, this is it. This is time to come back into the gold space. And all of a sudden they get whipsawed and it goes back down again. What we saw on Wednesday was really interesting. We saw the miners make a huge move while the stock market was in the middle of this correction, and we're starting to see panic selling now. But on Wednesday, it was really interesting because the day before, on Tuesday, you saw the silver price move up 50 cents, with the dollar up big, the stock market down, and gold down like $5. And that was a tell for the next day when the gold price shot through 35 resistance and started to go towards critical resistance at 1850. But it did so on the back of that really confusing Biden press conference, where he basically said, we're not going to do anything if Russia takes over the eastern part of Ukraine, where it's basically Russian. But if he goes in whole hog, boy, he better look out. We're gonna put a lot of sanctions on him. Like, what? Like, you just gave him the okay to invade, basically. And I think that's the reason why the gold price did that. And you always have to be leery of whenever you see the gold price pop on geopolitical saber rattling. You always have to be very skeptical of a move like that. And sure enough, the gold stocks came right back down and gave away all their gains by the end of the week. But it's very encouraging what's happening in the gold space here, because what you're seeing is ever since the Federal Reserve in the middle of December announced they were going to be tightening monetary policy, the gold sector has been making higher highs and higher lows. And the miners have been doing the same thing. And silver recently has begun to lead the gold sector higher. So all those things are very bullish. And at the same time, you're finally seeing the stock market roll over. But it's rolling over in panic fashion today. So the miners are down today, even though the gold price is up. But this is all very encouraging. A lot of the juniors that I own, the ones I follow, they're being sold off, but there's not much volume, because I think what took place was you had tax loss selling last year was the most brutal I've ever seen. I think I mentioned that the last time I was on your show. And I think all investors of size sold last year into the tax loss selling silly season, which is at the end of the year. And basically, I think, and then that ended on Fed Day, because on Fed Day, you saw a huge upside reversal with huge volume, right? So the uptrend has been taking place ever since then. And then this past Wednesday, when you saw that move, it took place on huge volume. The volume spike was just as high as the volume spike that you saw on Fed Day last December, in mid-December. So, and this sell-off ever since then has been taking place on less than half that volume. So what you're starting to see is some sector rotation, out of these tech stocks that were, just continued to climb, for the past 13 years. And you're seeing some sector rotation and a good view for, a good argument for sector rotation happening starting to take place at the end of September, I believe, was when you look at the price of Newmont. Okay, Newmont Corporation is the largest, most liquid gold stock on the planet. And on the last day of September, you saw a huge move in that stock, while you saw a huge move down in the NASDAQ. And ever since then, the stock has been bifurcating from the sector. In other words, it continues to go higher, right? Making higher highs and higher lows, while the sector continues to kind of like whipsaw and create this bottom. So you're seeing bellwethers lead. You're seeing whipsaw action in the past 6 months or so, where where the sector's trying to create a bottom, and we're finally seeing risk off in the marketplace, which is what we need. We need to have these retail investors coming into our sector.
So
I know that was a long-winded answer, but
no, but that's a great answer. So if people are seeking the risk off trade, do you think a lot of Bitcoin holders might realize, wait, this is tracking more of the general equities than it is, preservation of capital, like the way gold does, or the way you and I see gold? I mean, are we going to get some rotation out of Bitcoin into gold, maybe?
Yeah, I think so. I mean, let's say it's pretty much a done deal now that Bitcoin is not an inflation hedge. Okay, and it's not a safe haven asset either. Okay, I mean, it peaked at 65,000. It's at 35,000 now, and that was just a few months ago. There's critical support on Bitcoin at 30,000. If you see Bitcoin go below 30,000, the uptrend line support on Bitcoin from a 5-year perspective, looking at a 5-year chart, is 12,000. So I wouldn't be surprised to see 12,000 Bitcoin seen pretty quickly if you see 30,000 lost on that level. So yes, I think you will see some of that rotation coming into gold stocks, because a lot of money that would have went into gold has gone into Bitcoin, right? So it only makes sense that it's going to be the opposite once the chart really breaks down.
What's your expectations for this Fed Wednesday policy meeting? The big news came out in December. Is this just going to be jawboning, or is there any significance for the markets this week? What do you think?
I think it's very significant. Let's put some historic perspective on this, on what's coming in to this Fed speak this Wednesday. We already know they've already started to tighten monetary policy. We know that they're going to start raising interest rates, right? It's already 100% priced into the market that they're gonna hike in March. Okay, and at least 3, maybe 4. Okay, what the market is uncertain about is will they wind down their balance sheet by March? That's what they've said they're going to do. Will they start winding down will they start selling assets? Because their balance sheet is not almost $9 trillion now. So that's what the market is wondering. The market is wondering, will they start out with a 0.5 point rate hike, which they haven't raised 0.5% in over 20 years. So, and also, there's also concern that they might even start to raise on this Wednesday. I don't think that's going to happen, because
that's going to tank the markets even more, don't you think?
That would bring mucho more panic into equity. So I don't think that's going to happen. But historically speaking, if you take a look at the gold price, the secular gold bull market began at the turn of the century, and it began simultaneously with a Fed rate hike cycle. Okay, and then in late 2015, after a 50% correction from the first phase, right, we had the second phase begin at 1045 gold. That was simultaneously took place when the Fed started a rate hike cycle. Okay, so that's why I believe that it's all. And when you take a look at the gold stocks in relation to the Fed rate hike cycle back in late 2015, the gold stocks began to bottom in September of 2015. The gold stocks began to bottom in September of 2015 of 2021. This time, right? And the tightening announcement already came last week. It didn't come in the form of an actual rate hike, but it came in the form of them telegraphing rate hikes and winding down their asset purchases. So, will they announce on Wednesday this Wednesday that they're going to start raising rates in March. I think they will. And I think it'll be a buy the news event, just like the tapering announcement was on the 15th of December December 15th last year. So I think that you're going to see more volatility in the gold stock, more volatility in the gold space. The gold price is going to be beginning from a much higher level than where the critical support is. And there's critical support on the gold chart at 1750. And there's critical resistance at 1850. And even though the gold price is near that 1850, the gold stocks are trading like stocks right now. People are panicking, right? But you're not seeing a lot of volume because, like I said, sellers of size already sold last year. What you're seeing now is just retail traders. You see some getting panicking and selling. I mean, some of my stocks that I see they're trading on, like 20,000 share volume, 50,000 share volume, nothing. You're not seeing panic volume. You're seeing panic fishing lines, right? But it's not coming with volume because there's just no buyers. They're waiting on the sideline, waiting to see what the Fed does. We saw an example of how quickly these gold stocks can go up in a short amount of time on Wednesday. Sure, they came right back down again, but when the bottom does take place, you're going to see these things move quickly, just like they did in the second week of January in 2016, when the mining space tripled in 6 months. Is that going to happen again, tripling in 6 months? I don't think so. I really don't. I really hope it doesn't. I want to see them go up slowly, like they did during the last bull market. But the market doesn't work for me. So we'll see how it happens. But I really think that the sector, the GDX, the GDXJ, I think they bottomed. On the last day of September last year, they tested those bottoms on Fed Day in mid-December, and they've been bottoming ever since, making higher highs and higher lows since the middle of December. I think that'll continue. And today you're seeing them bounce off support. There's support at 39 on the GDXJ and 30.50 on the GDX. That's uptrend line support, and they're bouncing sharply from there right now as we speak.
Dave, I want to do a follow-up on how you approach stop losses. You've mentioned in the past that you kind of have a hard and fast rule. I think it's 25% stop loss. But as you just referenced, sometimes you can buy a junior. There could be no fundamental change in that junior from an investment standpoint. But on low volume, you can get a 17% spike down. So how do you reconcile that with your hard and fast stop loss rule?
That's a great question. I'm so glad you asked it because I have a rule. It's 20%. That if I get into a stock and it goes down 20% after I purchase it, I sell it unless I believe the sector is in the process of making a significant bottom. And I think that's taking place right now because, like you said, a lot of these moves are taking place on really low volume. So it's impossible to call a bottom, right? It's impossible to pick a bottom. So what you need to be doing since what I've been doing, what I've been doing since October of last year is I've been buying weakness in single asset juniors that are de-risking large high margin projects in tier 1, tier 2 jurisdictions that are on the fire sale table, right? I switched out drill plays last year, right? And it's like, why should I invest in drill plays that have, that you're taking a chance on these companies making a discovery when I could buy these companies that are already de-risking these high margin projects? They've got millions of ounces in the ground already. They got blue sky potential. They're either at or close to the feasibility stage or the finance stage, or some of them are even shovel ready, and they're just waiting to be financed. So that's what I've been doing. And some of these charts that I bought, Bill, you're a subscriber. They're really ugly. These are ugly charts. I've been in this sector 20 years.
Dave, a wise guy once told me you sell rhino horns and you buy fishing lines.
I believe that was me. But yes, and it's so easy to say and tough to do. But you have to be buying in environments like this to get those 5-10 baggers. I mean, you're not going to get the 5-10 baggers by chasing stocks after this thing's broken out. It's not going to happen. So you have to have the fortitude and the cash, and don't use margin to buy these things now. But you have to make sure you're buying the right ones too. You have to do your homework. You have to do your research. And this is the time to do it because, I really feel we're really close to this being the bottom and of all the things that I told you about pointing in that direction.
So you're confident in this bottoming period. And then how do you decide between adding to a current position versus taking one from your watch list, because you have a watch list? Go through the rationale of how you decide that, please.
Sure. Well, like I said, since October, basically, there was some strength coming in November, and I took the opportunity of that strength to get rid of some drill plays on the strength. Some I made money on, some I lost money on. And by the way, I still have
Dave, newsletter writers aren't allowed to admit they lost money on anything, right? I thought that was part of the game here.
Oh, no, we have to lose money, Bill, because that's how we learn to make money in the future.
And you got to admit it too, right?
Losses.
Yeah, you have to admit it. Not everything's a winner.
I mean, come on. I mean, every especially in this sector. I mean, anybody who says they don't have losses in this sector, they're not being completely upfront with you. But anyway, I digress here and get back to your question. Basically, I put my major CEO hat on, right? I mean, if I'm and this is what, and you have evidence of what these majors are doing. They're buying single asset juniors, right? With blue sky potential or mines that are already, producing or close to production, or not even some like Bear Creek. I mean, like a Great Bear. Great Bear was bought out for 1.7 billion without a mineral resource. But if you see Pretium being taken out, you see Golden Star Resources taken out, you see these companies being taken out. Basically, what you're looking for is, okay, I know there's a bunch of companies out there that fit that bill, right? That I know that the majors they're gonna have to be replacing these ounces, and they're gonna do it when they're on sale now, because they during the last bull market, they did it when the gold price was going a lot higher. They didn't do it when gold was on sale. They did it, and they did it with their paper, right? Well, they've wised up, they've shored up their balance sheets. They're doing it with large cash components. They're not doing it with all paper, and they're doing it, on weakness, like we should be doing. So now's a good time to follow the example of the major CEO. Not like last year in 2010, 2011 when they were doing it. Anybody who did that then lost a lot of money. So now we follow their example and follow their lead. And I take a look at these companies that are similar to the ones that are already being bought out. And some of them are being traded. I mean, are being valued at nothing here. And as another caveat, you can, you hear the lessons of Rick Rule saying, you invest with the mining legends, you should do really well, right? He loves to say that mantra. And you can get into some of these companies that these mining legends got into. They're trading at less than what they paid. That rarely happens. I mean, I purchased a company for myself a couple of weeks ago, and I did a write-up for my subscribers. I said, you can get this company now for less than what Ross Beatty paid for it a couple of years ago. He's still got a huge position. They got the access to capital. He's paid 75 cents for it. You can buy it here for less than 70 cents.
And then that's open to anybody. You don't have to be an accredited investor.
Exactly.
Just to encourage our listeners. You don't have to be an accredited
investor, right? You don't have to be a millionaire to get into it, right? Because we know that these guys that are making all this money in the sector, they're doing it with warrants from the private placements that they can get into. Myself included. I'm able to participate in private placements. And also what I do with my services is if I can get them into the private placement that I'm getting into, I will. Like the one I got into last week, the CEO was gracious enough to open it up for 3 of my subscribers. So, it's a great time to buy these things at what these mining legends bought them for, even in some cases less. And they're basically trading at perpetual warrant prices.
And there's enough opportunity for retail investors if they're willing to do the work. Opportunities such as you're describing, because you started off as a retail investor, right? You weren't filling out private placement subscriptions when you tripled your money way back when.
Yeah. I mean, when I started out, I didn't really have very much idea what I was doing. I didn't understand that until later. The famous ruleism, I confused the bull market with brains, definitely happened with me. But, the companies that I held on too long too long for. I mean, I learned from that lesson. I should have taken more profit. Each time I take more and more profit at each top. And it's these lessons you need to learn. And, like I said, if you don't have the time to do the proper research in these companies, I do it for you. And once I do it for you, I write a report up on it, and then I send it out to my subscribers the day before I plan on taking a position. So we kind of all try to get into the position at the same time. That's
right. And when you do site tours, you do a site tour write up, although you're not doing as many site tours as much these days.
Unfortunately,
right?
I really miss that part of the business. I really do. I mean, I miss the human contact part of the business. I hate having to do all this from my home on a computer, but it is what it is. I am going on a site visit here in a couple of weeks, and I'm really excited about it. It's the first one I've been on in a couple of years.
Great. Well, Dave, one company in your portfolio before you go, I'd like you to comment on Alexco Resources, the silver producer developer. They're doing another raise. It seems like these companies that go into production don't stop raising money. When I thought they told us that once you go into production, you don't raise money anymore. What's going on?
Alexco is that little engine that could. They've been that little engine that could for so long. They get to a certain point, and then something beyond their control beats them down. They start doing all the things right, and then something beyond their control, takes them down a peg. And in the Yukon, COVID restrictions have been really, really tough, and it's really set them back a lot. That mine came on production right in the middle of that. There's so much high-grade silver on that property, and the property is huge, and it's only been like 15% explored. There's so much silver there that they built a mill on top of a silver deposit accidentally. That's how much silver is there. So, they're proving up more ounces there. They're doing that. They've gotten into production. I think they're close to commercial production. They did raise a bit more money, but in their defense, they did do it, as a flow through, so it was, so the money they got was at a higher share price. They did it for exploration. They raised that money for exploration. They have enough money, to support their production. They just raised that money for exploration. And it's funny, the day they announced it was on Wednesday, that Wednesday that had that huge move up, and the stock was sold off on the announcement. And then it reversed sharply, and it was up big on the day. And then all those gains now have been taken back, because, the sector is in the process of creating this bottom. And when these significant bottoms are being created, it does everything in its power to get you off that bull before that bull takes off. Everything that it could do to shake you off that bull, it's going to do. And it's doing that right now.
Excellent. We'll leave the interview at that. Dave, thanks for coming on the show again. To learn more about what Dave offers, he offers a teaching service as well as a stock picking service, because you get to look over his shoulder and see where he is investing his money. Website is juniorminerjunkie.com. Thanks for coming on the show today, Dave.
Oh, thanks again for having me. Always great to talk to you.